The number one question I get when I'm talking markets, whether it's with folks in person or here on Twitter, the number one question I get invariably is, tell me what the hottest pot stocks are. What's the name that's going to ramp. Just a general enthusiasm about getting into the space, which I totally get. I mean, I think generally people are thinking, they see a future where legalization on the federal level is going to materialize. They want to get ahead of it. So it makes total sense, and I can understand why. So the purpose of this video, again, just to respond to a bunch of questions I've gotten about it, is to touch on a few specific names. We'll touch on an ETF or two as well that kind of diversifies your single stock exposure. And I'll talk a little bit about my thoughts on the space itself as an investment opportunity and why I really don't have any of my capital at all deployed in this particular sector. So we'll get into all that stuff through the course of the next several minutes in this video, but let's start with TLRY as the first name. And the reason I wanted to kind of touch on TLRY as the first name, because if you look at this chart, and TLRY just started trading back here in 2018, July 2018, before it ramped up substantially. And you can see this big ramp. This is largely attributed to the news about recreational legalization in Canada, which led to this kind of hyperbolic, I hate to use the word bubble because it didn't last long enough to call it a bubble, but clearly there was a substantial ramp up and a lot of enthusiasm. So there's a couple things that you want to note here. First of all, this actually looks a lot to me like a crypto chart. And so one of the things that you want to think about are who are the people investing in this stock as it's ramping here, through this whole period. And what it's a lot of speculative money. And this isn't to sound pejorative, but a lot of folks in the stock market call it dumb money. It's kind of fickle money. It's not exactly seasoned investors. It's a lot of folks like the folks I talked to at the bar that says, hey, what's the stock I need to own? Well, for a minute, it was TLRY, and money poured into this thing, and you saw this massive ramp all the way up to $300 a share, which was just, just about a little over a year ago, or just about a year ago. And today we're trading obviously here around $30. Pretty brutal session as well on Friday after really poor earnings that they posted here last week. So TLRY is just a good example for a couple of reasons. Number one, it shows the mania that can happen and materialize in a space like this, not unlike what happened with crypto. But with regard to the notion of legalization in Canada, I think this is the other part of this. You have to keep in mind that went into effect in October 2018. Canada only represents about 37, 38 million people. So it's, 10, 12% of the US population. It's a tiny fragment of the population. So from a pure revenue standpoint, it's not all that meaningful. Looking at the chart here, you can see this really brutal downward trend. We're trading in kind of a range of between $34 and $50 at this point. TLRY is not a name I would own, honestly. It is a Canadian company, but they do trade in the U.S. on the New York Stock Exchange, but just not a company that I particularly like. One that I do kind of like, and I've mentioned it before, is Canopy Growth, which we're looking at now. Canopy Growth is actually the largest name right now from both the revenue and market cap standpoint. From a revenue standpoint, these guys are, they're in the $73 to $75 million range as it relates to a 12-month rolling. With regard to market cap, they're probably close to $11.5 billion right now, which is pretty substantial. But as you can see, they've been a lot healthier than TLRY. They've seen some peaks and valleys, but right now they're trading pretty far below the 200-day moving average here. The other piece to know about Canopy Growth is that they created a partnership with STZ, which is another company I've mentioned before as somebody who works in the whiskey business. STZ is Constellation Brands. They have they have wine. They do have some spirits exposure as well, but they also have most substantially beer exposure, particularly Mexican beer, Pacifico, Modelo, as well as Corona. a lot of that which is canned. So they've been hammered on a couple ends. Actually, let's just take a quick look at this at the STZ chart. These guys actually got hurt pretty bad from the Mexico tariffs that were talked about over the summer and threatened, and then eventually kind of got squashed as we came together on a deal with Canada and Mexico, kind of NAFTA 2.0. The steel and aluminum tariffs hurt these guys because they can a lot of their beer. But these guys did take a 40% ownership stake in Canopy Growth. So I think to me, this might be a smarter play if you're looking for more of an ancillary play on cannabis. One of the last things I want to talk about in terms of trying to make sense of this and using specific names is a ETF that is called MJ, and it's a basket of stocks, obviously, that are all related to cannabis. It's been trading for a little while now. You can see back here in 2000 and 2015, January 2016, started trading. And obviously, there's been a lot of stochastic price movement. Again, challenges to this particular space. As you can see right now, it's on a little bit of a downtrend. To get back to the central point that I want to make about why I don't particularly put capital inside the cannabis space is very simple. We have regulatory uncertainty on the federal level, and until we get clarification on that and direction on that, this space is going to continue to either trend downward or continue to chop sideways. And the reason is because obviously there's state by state legalization that's happening, there's decriminalization that's happening, and all that's very positive. But until there's federal legalization, many of these small businesses, and I can speak to this anecdotally, used to spend a lot of time in Denver, Colorado in the whiskey space, and attended a lot of these networking meetings where we were talking with private equity guys, many of which were in the cannabis space, and their biggest challenge was they didn't have access to commercial banking from a basic business banking standpoint, as well as commercial financing to help scale their operations. They basically are running cash businesses, and that still exists to this day. Why? Because it's still viewed as an illicit substance in the eyes of the federal government. So that really does create a massive headwind. And until there's regulatory resolution, I really don't feel great about the space. If you demand on playing the space, and again, keep this in mind. So that tells you something as an investor. Number one, you have kind of a volatile, speculative investor in the space as it stands. So you're going to see a lot of volatility in price. Number two, you have to think about the time value of money. If you're a bull and and I agree with the bull case in that we're going to eventually see legalization. But if you're thinking that that's going to happen anytime soon, I challenge that. I think that's not the case. And until that happens, you're not going to see much ramping or growth in this space. So you have to think about the time value of money as well. Are there better opportunities, other places you could place your capital right now that could get you more growth in the short term? I would argue that there are. But if you really do want to go into the space regardless of what I'm saying, I would tell you to do an ETF like MJ, which is what we're looking at now, because this gives you a little bit more diversification. It minimizes any single stock risk, because believe me, there will be attrition. Some of these companies will go out of business, and it helps you capture the upside if any one of these guys tend to pop. So that's kind of my feeling on this. There's a little more price stability. You don't have to have as much of the stomach to ride the roller coasters that can be some of these single stocks in cannabis now that, again, are not unlike what's happening in crypto, a lot of speculative money. So all that said, those are kind of the fundamental, and just as another example, there's another ETF out here called YOLO that just started trading here, back in, looks like maybe late March, early April. And you can see this has just been a bloodbath. I mean, terrible time to open this particular ETF. It's just ridden down. But again, if you go back and look at, again, like Canopy, if we go back to the Canopy chart, and what we can do here, we can actually, if we zoom out a little bit and just kind of add in the S&P, what you'll find is they haven't traded too far away from each other, which I think is, to me, this is another reason that makes Canopy Growth a little bit more of a, kind of give you more of a peace of mind type play. You can see it's traded fairly similarly with the broader market. And that's because there's institutional money holding this as well. It's not as raw and speculative as some of the other names. So I think CPG kind of makes a lot of sense. Excuse me. But I think for me, if I needed to put money in the space, I'm taking Stars, STZ, Constellation Brands, or I'm taking MJ as an ETF. If I need to take a single name, I'm certainly taking Canopy Growth. Anyway, that's my quick kind of hit on, no pun intended, on cannabis and pot stocks. Any questions, or if you got any specific names you want me to hit on, again, just hit me up in the comments. I'll do another video probably sometime next week, and we'll catch up on S&P. Obviously, there was a nice rally on Friday, constructive session on Thursday. We still have some major questions with regard to China and trade. Hopefully get resolved in the next couple weeks, but we'll get back to those as well. Anyway, happy trading. Appreciate you guys watching, and we'll catch up very soon.